You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
We're coming from beyond the grave to take your money.
40,000 years of rot.
Hey, wait,
partial
Tom.
truths.
Wait, is that you got an early trick or treater out there? Look at that guy in the bear costume. That is
Sadly.
a realistic looking bear costume, Tom.
I love the way he scares my dog, too. Yeah, thank you for that.
Tom's got a bear at his house. It's been there all week. It's just like hanging out. It's waiting for the candy. It is waiting for the candy. And the little kids.
The bear took advantage of trash night the other night, went straight up the street through every person's trash can, save one. So
This
those people must
child
not
is
eat well.
too large.
Yeah, exactly.
Oh, this
So,
one
yeah.
is too small.
Perfect,
oh,
right there.
This little child with all the M&Ms is just right.
Yeah, I wish they'd hide that candy from me because we got it here in the house.
Do you
too,
have
so.
candy at the house?
Yeah, because we're having a few people, as you know, over for a little neighborhood thing later
Mask
on. today.
up, baby,
So we'll have
mask
candy.
up.
Oh yeah,
I went around
I'll be in front of the fire.
I went around our neighborhood today, and our neighborhood
Yeah.
is trick or treat central for the entire
Oh yeah, no,
planet.
you guys are ground zero.
It is the hottest trick or treating location, literally. I am not exaggerating, in America. Some of the houses in this town get 4,000 or 5,000 trick or treaters on a Halloween night.
They bus them in, don't they?
They do. They literally bus them in from the Disney resorts and
Crazy.
places. They bus them in. So we have no idea what's happening tonight. But most of us, including us, have put up signs on the front porch saying that we're
Not doing it?
We're quarantined. Big nasty.
Oh, okay.
Yeah, we're quarantined.
Okay. Scarier than
Beware
normal.
COVID inside. Oh, anyway.
That'll keep them away.
Well, welcome to Halloween.
We're going to try to scare up some big profits for you today. So
Yeah, no, we don't actually do that. Despite what he just said, we don't actually do that. But we're going to try to scare away some evil stockbrokers.
Oh,
Or
and bad
insurance
investments?
agents and bad investments and stupid ideas and bad strategy and bad plans. Bad plans. We could scare those off.
Not to mention companies that are putting their cash holdings in Bitcoin. We'll touch on that a little later.
Yeah. Talk about a trick. And I want to invite you over for a little trick or treat here at Talking Real Money. I don't know what the trick is, but the treat is we're going to try and help you manage your money better at 855-935-TALK, 855-935-8255. I'm Don McDonald in Trick or Treat World, and that's Tom Cock in Bearland.
Bear country.
Bear Country Safari!
Yeah, I'm not actually kidding. That's a true story, by the way. We're not going to spend all of the show on it, but the bear has been here twice in the last 3 days, so I don't know what the deal is.
Wait. It was there the day before yesterday, too. You said
That's what I said. So
yesterday?
Twice in 3 days. I didn't see it yesterday.
Oh, you didn't see it, but it took all the trash cans down.
Yeah, it did early Friday morning. That's true. So it was here Thursday, Friday, and Saturday. Okay,
and then
3 out of 3
out in
days.
the backyard eating apples.
Give the bear his due. Pardon me. He's been here all week. And he sort of crawls back in the bushes and then pops out at the inappropriate times.
Hey, I'm a bear. I'll be here all week if you like the show.
Yeah.
Come on back. Sitting
Got
in the
my
backyard.
dog pretty scared.
Sitting in the backyard eating apples.
I know. Just sitting there like, hi. You got a problem?
It's hysterical. There's really a bear. I've seen pictures. It's a real bear. It's not
I
like
can't
a
tell.
dog
Is it a
dressed
cub,
in a bear
though?
suit.
Is it a full
It's an
full-grown
older.
bear? I can't tell.
It's an older cub or a younger
Okay.
adult, but it is not a cub. That bear's a couple $100 pounds. If it's
Oh yeah, for sure.
probably
Well,
250.
I lost the wrestling match, as you know, so it's heavy.
Oh, is that why the scars
Big
on
old
you? I
dumb
thought you
bear.
were fencing.
Nah, we both run the other direction when we see each. Although, as I said, when he was out there the first day with the trash, he just sat there and looked at me
It's
like,
creepy.
These Doritos are delicious.
I'm telling
Thank you.
if you think 2020 was bad, it's now the animals are rebelling.
Taking over.
They are.
Because you got the bird story in your place.
Oh my gosh, we went to lunch and I'm driving down the street and we have one of these little ponds that's not really a pond, it's a retention pond. You know, it's something they built but it's beautiful. It's up against the wetlands.
Fake pond, man-made pond.
But every once in a while here in Florida, we see the snowy egret. And here's the snowy egret in its natural environment. So we see this snowy egret, but this was a convention of snowy egrets.
They apparently didn't hear about the COVID and didn't think it could go to Orlando.
I'm telling you, if there were at least 500, if not 1,000.
Wow.
I did not count the snowy egrets.
I'd be scared. That many birds, that'd be just like the movie to me. I'd be watching my hair.
And snowy egrets are not like sparrows.
Oh, these are big.
They're
That's a
3
big bird.
feet or more tall. These are big honking birds with sharp, pointy beaks.
Were they diving on you?
No, they were all sitting in the trees,
okay.
like flapping their wings. And
Where's Hitchcock when you need him, I guess, huh?
any ornithologists out there know why all the snowy egrets gathered on Halloween?
And those of you more
Trick-or-treating?
oriented to mammals, tell me how to get rid of the bear, if you don't mind. So,
855-935-TALK is our phone number, 855-935-8255. We do really, truly love to talk with you and try to help you manage your money better. That is our main job after we scare off the wildlife. 855-935.
Tom and Don are talking real money.
Before you end up buying a financial product that you'll regret later, either call us on the podcast or the show, or if you need a little more time, that's why we offer free meetings with our fiduciary advisors at Vestory with no cost, no obligation, and no high-pressure sales pitch, I promise. Just give us a call at 800-386-3004, or better yet, just set up an appointment at vestory.com, VESTORY.com.
For your real life and real future, Tom and Don are talking real money.
Happy Halloween.
your on-air Monster Mash. Two monsters talking about
real
your money.
Money. Hello, everyone. Don McDonald here. And that's Tom, and you're invited. 855-935-TALK, talking about money here on Talking Real Money. Gee, what a coincidence that is. We got a call. Let's go to Nancy. Nancy, welcome to the show.
Hello, Nancy.
Hi. I would like your opinion on Vanguard. They sent me an email that they want to transition my account. They're working towards retirement of their old investment platform, which supports mutual funds, which I have, and they want to update and change it to a brokerage platform.
Yep, that's the way everybody's going, because they want.
Explain what that means.
They want to have
Don.
the ability for all their clients. Well, one, it's the reason they want to make this change is so that everybody's on the same platform. It'll save them money in the long run. The reason they have a brokerage platform, and this is not going to impact you at all, but the reason they have a brokerage platform is that, say, we get these calls all the time from people who have a bunch of individual stocks.
Yep.
They can get in touch with Vanguard and transfer those stocks in kind if you have a brokerage
In other words,
account.
you don't have to sell anything. They just move from one custodial account to another.
Which allows the customer to avoid or to manage their capital gains as they sell those securities to get into the Vanguard mutual funds. This is not a negative for you in any way, shape, or form. There is no charge to have a Vanguard brokerage account, just like there is no charge to have a Schwab brokerage account or a TD Ameritrade or an E-Trade or whatever it is. And it's not going to change what you own, and it's not going to change the price structure of anything you own.
Okay. That's what
So
I
it's
wanted to know.
No negative to it at all, and it's good for Vanguard because it allows them to stop servicing two types of accounts and only service one.
I think people hear. Thank you for your call, Nancy. I think a lot of people hear that and think they're going to start selling me stuff.
Right.
I'm in a brokerage account.
I know.
Not going to happen.
And that's because the brokerage industry gave the term a bad name.
Yeah, broker. We get it. Yeah.
Yeah. Cogitate brokerage.
Exactly.
It's
not
broker, brokest.
Yeah. Yeah. That's no brainer.
All right. Hey, Good luck. You'll be fine. You're going to be fine. It's good. They're doing it to everybody. 855-935-TALK. Hey, Michael, you're up next. Welcome to Talking Real Money.
Hey, thanks, guys. Love the show. Don, I think it's it's partly down to you that I'm in such a great position, because 30 years ago I was listening to you on Seattle Business Radio and started getting ideas about how to start saving money for retirement and what to watch out for, and went to you guys'
you want an interesting trivia question? Here's a trivia question for you. You remember what the station's call letters were?
Oh, gosh, no.
Okay, it was KEZX. Do you want to now? Right. Who do you think the program director was at KEZX when I was on?
Tom Cox? I don't know.
Correct. Hey, he nailed it.
Oh, he wins. Okay, you get a free Hershey bar for that.
He nailed it. He was my program. He was the program director when I was on that station.
Oh, that's funny. Hey, I went to your retirement meet a few months back. Really enjoyed that. In fact, actually, I just met with Taylor, Tom's son, just recently.
I'm sorry.
Over my portfolio. Yeah. Anyway, you guys have been great. A quick question for you, though. The company I've worked for 30 years has been purchased, and so now I have a choice between changing my retirement plan, or my 401k rather, from Fidelity to Charles Schwab, or to take a one-time, transfer everything to an IRA, manage it myself. The downside of doing that is that if I were to stay with Fidelity funds, for example, ContraFund, the deal we used to have under the old plan, because my company had some pull apparently, was that I'd pay 0.45 per whatever. It was 0.45 was the cost for ContraFund. If I do it myself, it's 0.85 now. So
really?
What?
Hold on, I'm looking
weird.
at it.
How much are we talking about, Michael? How much money?
Total, I think it's about $1 million or 1.2.
Okay. Yeah, I mean, that's one consideration.
It is 0.85 now.
Just to buy Contra. Wow.
Yeah.
Yeah.
Yeah, I tell you,
that seems like that's gone up, but maybe not.
Here's the thing. If you go to Schwab, you can. It's an opportunity to simplify.
Yep.
You're not going to have any taxable event, and you can start using. For example, you can use with no transaction fee ETFs that have like almost no cost. You want to go from 0.5 to 0.05? You can do that by using ETFs at Schwab. You could use the VT. You could get some small cap. You could get your bonds there using Vanguard ETFs or Schwab ETFs, or
you could use Avantis.
You could use Avantis soon. Dimensional funds will have ETFs.
Yep.
It gives you a lot more options, and it's going to lower your costs. If you could lower your costs and have a broadly based index fund, my guess is long-term you're going to do as well, if not better, than you're doing with ContraFund, and it's a lot easier.
Right.
But I got to throw one more thing in there. I mean, frankly, just using Taylor, you'll do a lot better. That's pretty much a guarantee.
Yeah,
there's no bias there.
I'm kidding. No. Just because if I don't say that, then he won't show up for Thanksgiving. So,
do you want him there for Thanksgiving? Really?
I got to think that through.
All right.
Go ahead, Michael.
Is there any reason that I would be better off taking it and putting it into an IRA now, other than just having a little more flexibility?
How old are you?
59 and a half.
I was going to say, if he's been listening to me for 30 years, he's not a spring chicken.
Did I make a good decision putting Don on the air? What do you think? I mean, it's still kind of the jury's still out on that.
Yeah, I was just going to say the jury's still out. Exactly. Yeah.
Okay. All right. Thank you, Michael.
All right. Well,
I mean, so I'm
going to go out and see if there's any trick-or-treaters in town. Bye, all.
It's a comfort. I mean, so if you're going to go manage it on your own, you're comfortable with the fact that you can manage it on your own, build the right portfolio, rebalance, et cetera, and not get upset by presidential elections or COVIDs or market, all the stuff that comes along, then do the IRA. In the 401k, though, you can make those same mistakes, right? Because you can still move money around. People generally don't have the tendency to do it as much when it's in a 401k. The question I would have with the new 401k plan is, what are the additional costs that are oftentimes hard to find That's the trouble. You got to really pull things apart. I think it should be more about that decision necessarily than the custodial.
Because
place.
I've seen 401ks, some that charge 1% a year for all of the other fees to pay the custodian the record keeping stuff. So you might want to check into those other costs. It really does. We believe that most of these decisions should boil down to a cost benefit analysis, and costs are part of that. And if you can lower costs and keep the discipline, that's the other part of it.
We know that's about a third of the return, generally speaking. It's not our numbers. That's just what the numbers say. So.
It's almost 6 one way, half a dozen. I'd probably lean a little more toward the IRA personally because I want to keep those costs lower, and I know I could do it. And if you can do it, and it sounds like you probably can, it might be better just to have an IRA. Plus, it's going to give you a little more flexibility of things you can invest in. 855-935-TALK is our number, 855-935-8255. Happy Halloween.
Tom and Don are talking real money.
There's a science to managing money. I call it financial physics, and you can get a free copy of my easy-to-read book, Financial Physics, at talkingrealmoney.com/free, or there's an interactive version available on Apple iBooks. It's called Financial Physics. That's spelled with an F, and you can get it free at talkingrealmoney.com/free or in the Apple bookstore.
Your guides to a really great financial future. Tom and Don are talking real money.
I guess I should qualify that. Happy Halloween, unless you're listening to the podcast. And then
thank you.
Happy November 2nd or 3rd or 4th.
Happy Election Day.
Oh, no, I'm sorry.
Happy? You feeling happy?
This is scarier than Halloween.
One way or another, it'll be over.
All right.
No, or it won't.
No, yeah, I was just going to say, wait, what gives you that kind of confidence? It's going to be over?
It doesn't. No, I don't.
We could be here in January and it's not over.
No, because I think constitutionally you have to by like the middle of December or something. But what drives me nuts is when people write this is the most important presidential election in U.S. history.
I take umbrage.
Every election is until the next one.
Which do you think was the most important election in American history?
I'm going to go with the first, or perhaps 1860. I'll also say 1940 or 44, pretty important because you're in the middle of World War. I don't know if changing leadership then would be a good idea. But
yeah, I really kind of
make a case for all of them.
I think 1860 though was the one that really decided whether
64 though too in many ways.
64 was another scary one.
Yeah, I mean, and if we hadn't had if the Union hadn't had some big wins in 64,
with little Napoleon,
little McClellan. So okay, but the question always is, and it's still coming up. It's
Welcome
still
to History
coming up.
Talk.
No, I know. Sorry. It's still coming up because people are still asking me, oh, my gosh, what if fill in the blank here wins? Then what?
And knowing your friends, I know who that blank is.
You have a tendency to fill in the blank of the other person that you don't like, right? Because and you think, oh, the world's going to go to, you know what? Here's the breaking news for you. That's unlikely to happen. Presidential elections determine very little about stock market futures. In fact, the numbers are crazily similar when you look at Republicans versus Democrats over the long haul. I mean, they basically either one has made about the same amount in the stock market. It's kind of, I know the current occupant promised huge returns. No, it's random. Nobody knows. You shouldn't base by the way, should never base any of your personal asset allocation decisions on any external factors, period. Yet we've said that for basically 30 years, Don, and people apparently haven't listened very carefully because they still do. And they think that's investing. Well, and I got to do something because of blank. No, you don't.
It's curious when you actually look back at the history. You see things like, there's this belief that Republican administrations tend to be better for the market and Democratic
because they're better for business.
Yeah, but you look back at the period from 1993 to 2001 during Clinton's administration.
Bill Clinton, that's pretty good market there.
The market exploded.
Yeah.
Then you look at the next 8 years under Bush, and it was
didn't work out too well.
Absolutely flat. Literally, it actually ended slightly lower.
Well, you had a bad start and then a bad end.
He had a bad start and a bad end. Yeah. But again, was that his fault or was it economic conditions?
Come on. man.
And then Obama ends up inheriting a bad market.
Yeah.
And then it soars.
Yeah.
And it soared. It soared right up to the end of his term. And then Trump, it soared through his until March.
And I know there's been some discussion in the election about here's what will happen to your 401k if blank is elected. I think that's a silly thing to vote for one person or another on. Really do. So, and we're not going to, don't call me and tell me why your candidate's going to be better for the market. Because we're not going to do
because it's
political talk anyway.
Well, plus, there's just no evidence to support either argument.
There really is.
To say a Democratic president is better or a Republican president is better for the market, there is zero. I mean, I'm looking at a chart back to 1929. There is no evidence that the president or, get this, the party controlling Congress has any impact on the stock market whatsoever. None.
Yeah, and
it's actually us
today.
Guys.
I know. Today we're in a pretty low, almost historically low interest rate environment, right? Mm-hmm. And so the suggestion in a lot of ways is money should go into stocks because that's a place to make money. And we're going to talk next hour about cash versus other things, but I still think you should have the right stock to bond ratio because you're going to need it when markets get ugly.
Well, and the reality of this whole argument is that what you do day to day really doesn't matter that much. It's not about tactics, it's about strategy. And most investors are tactical, not strategic. They're moving the pieces on the chessboard one at a time, not thinking years down the road or moves down the road. You need a strategy.
Tom and Don are talking real money.
Everybody needs help with their money now and again, and if you need more help than we can give in the course of this podcast or show, set up an appointment with one of our advisors for a free actual meeting with no obligation and no high-pressure sales pitch. Just go to vestory.com, that's vestory.com, or call 800-386-3004.
Reality radio for a really great future. We're talking real money.
Hello again. 855-935-TALK is our phone number. Oh, wait, I should have done it this way. Hello again. Welcome to our show. We're talking about money.
Keep going. We tried to get Vincent Price, but we couldn't afford him.
935-TALK. That's our phone number. Call it.
If you dare.
Okay.
That's
anyway, hi, I'm Don.
All tricks, no treats. All treats, no tricks.
Yeah, let's do it the right way, shall we? I forgot what I was going to say. I got to tell you, it's funny. Lately, Tom, he put some money into his brokerage account. And he's been bragging on a daily basis.
Oh, yeah, I was.
He was just because we don't believe in following it. So he was doing, I'm up X number of dollars today.
Yeah.
How much are you up? And so, okay, how you doing this week?
No, I think I haven't even actually. I would be curious to go back and look at the deposit a few weeks ago to see. I bet it's down. I mean, it was a tough October, right?
This last week, it was a tough week.
Last week was really bad. I think October, though, the major indices lost somewhere 2% plus, which isn't in today's world that dramatic.
And it doesn't mean anything. It just means that people are sitting around going, I don't know. Did we get ahead of ourselves? I don't know. Should we sell some stuff? Okay, yeah, maybe. That's what it is.
Yeah, and people have a tendency also to think about returns. I need to make this money up until the point I retire. You really need to make that money through retirement because you still need the growth. So you really don't want to be making a big change when you retire. Anyway.
Well, yeah, it's there's a wall at retirement and you get to that
people
wall.
People have a tendency to think that.
It's all going into CDs.
I saved enough.
Now.
Yep. I'm going to put it in CDs and make 0.7% or whatever other lovely rate. Because there's not been a very positive year for stocks. Now, the S&P 500 is held up. It's still up 2.7% year to date. Mm-hmm. Not great, but okay. A diversified global portfolio's lost 13%. Portfolio 60% in that diversified stocks and 40% in bonds lost 8%. But here's the really great news. 2 funds we recommend free on the air. You can do this yourself if you like. The VT-WAX, that's the global stock portfolio operated by Vanguard. It's 8,800 securities globally. It's down 1.2%. And here's the great news, Don.
I'm dying for great news.
VBTLX. V as in Victor, right?
Vibtelix.
B is in Bravo. T is in Tango. L as in Lima. X is in X-ray. I'm starting to learn these, by the way. VBTLX, that's the Vanguard Total Bond. It is up 6.3%. And by the way, all of you people that said you can't make any money in bonds anymore, the bond fund that for most of our clients actually have most of their bond money in is up 8.8% year to date in a very low interest rate environment. And
that's a shorter term bond fund.
Intermediate term, yeah. So there's been some discussion this week because government bonds did not cooperate when the market went down and they didn't go up. Okay, well it happened in March too. Anyway, so people think one affects the other. So here's what's the bottom line? The bottom line is if you're a good investor, you don't care.
Attention to the short term.
You don't care. You don't care. No, you really don't. No, you shouldn't. But if you're worried, this is very typical.
Yeah.
1 out of every 4 years, stocks lose money. That's just the nature of them. They're more volatile than cash or bonds because they have made you more money, and you're getting paid for dealing with that volatility. If you want something safe, again, and we'll talk next hour a little more about other things that people think are safe, but you can just go right down to your bank and ask them for a CD. I think the top one I saw at Bankrate this week was for a 2-year was 0.7%.
That is
not a whole lot.
Not any money at all. Yeah, and I'm just looking at the Vanguard Balanced Index. 5.25% for the year. That's not bad.
No, it's very good.
Yeah, even though the stock market misbehaved. And remember, in 2018, the Vanguard Balanced Index lost 3%. Part of investing, this is the part that none of us like, but all of us must accept. Investing means you're going to lose some years. It's the price you pay for making more than 0.7%, or for the potential of making more than 0.7%. We don't know you're going to make it.
Yeah, the greatest high yield savings account I could find was Axos Bank that's paying 0.6%. So again,
gosh, that is terrible.
Not much. And every once in a while, I think maybe I should manage my cash better for 6.
It's hardly worth bothering. 855-935-TALK is our phone number. 855-935-8255. Give us a call so we can answer your questions because they're immensely important. You can also send your questions in, as many do, at TalkingRealMoney.com on the contact form.
Tom and Don are talking real money.
If you don't have a financial plan, well, sometimes you just need a little help getting started. And we offer that free help to anybody in a meeting with one of our fiduciary advisors. To set one up, just go to vestory.com, VESTORY.com, or call 800-386-3004. There's no obligation, no cost, and I promise, no sales pitch.
For your real life and real future, Tom and Don are talking real money.
Okay, let's check and see. We got anybody on the phone? No, we don't. 855-935-TALK. We got lines open for you right now. 855-935-8255. You can also send your questions to us at TalkingRealMoney.com. Click the contact button.
Become very popular, by the way.
Oh, my gosh, I've got a slew.
Yeah.
I have a slew. But the first one I'm a little worried about. I'm a little worried because how sensitive are you feeling today?
Very, actually. Halloween does some weird thing. I don't know.
Oh, good. Then
I feel the spirits.
Which story of the house are you on right now?
I'm on the first, so jumping might hurt my ankle at my advanced age, but probably won't break anything.
And you're not going to fall into the pizza truck or anything, right?
That's hard to do.
All right.
Tricky. That's true. I make the fire here in an hour.
The subject of this one is 2 comments.
Oh, boy. All right. Go ahead.
One major difference between VFSTX and VFSUX. Those are the bond funds.
Yeah.
One is the regular
TX is the
investor shares,
corporate.
No, they're both the same, but one's investor shares and one's Admiral shares. So the good news is we get to tell this guy he's wrong on the first one. So one major difference between VFSTX VFSTX and VFSUX is that one has a minimum of $3,000 and the other $50,000. Not anymore.
I think got rid of all that stuff. Yeah,
they did.
Right. They got Admiral. Anybody can walk in with a dime.
I don't know why they still have investor shares or why they still have
I don't know.
Admiral shares.
It just
are
makes
cheaper,
it confusing.
but they both have a $3,000 minimum. So,
yeah.
Sorry, you're wrong on that one. Now, here's the second one.
Uh-oh.
I love the way he phrased this whole thing. We'll get to that in a minute. Yep. Don, just let Tom know in private. I'm not going to let you know in private that he
Apparently
was
not.
technically wrong when he said to the widow's social when he said to the widow's Social Security. He said either she gets hers or her husband's. The way SS in their wisdom calculates it, she gets hers plus topped up with her husband's up to his maximum.
Okay.
You were technically. I know.
Come on.
I know.
Really?
I know. If
Wow.
both are living, she can claim hers and her husband's, but it's topped up. Sorry
They
for
just
ruffling.
add the difference.
I know. Sorry for ruffling Tom's feathers a little bit, but I may be wrong. But if he accepts if he accepts this,
Yes?
this is the last part. This is the part I
Yeah,
like.
okay.
If he
Yeah,
accepts
all right.
this, I can hear him saying, "That's true," but
That's literally six
one way, half.
dozen one.
Yeah, I know. 6 one way, half a dozen the other.
Thank you.
Unless
Okay.
it's 6
Thank you.
dozen one way and
It's
100.
you get the larger of the benefit, yours or the spouse.
That's
the
what
that's the correct terminology.
I just want to rate. I wanted to read it
right.
because it was funny at the end. I can hear him saying, "That's true."
Yeah, and we got in a family argument about this a few years ago, and somebody told me I was wrong. I was like, no, I'm pretty sure I'm right about that because
All right.
I do this every day.
I'll read more later, but that
Pretty
one
sure.
was more
Yeah.
fun than the rest.
Thanks a lot.
855-935-TALK. That's our phone number. And let's save Tom grief and just go get a phone call. And Nina, you're up. Welcome to Talking Real Money.
Save me, please.
Hi. So
Hey.
I have.
She's nice. Yeah.
Yeah.
Yeah,
We
you
hope.
don't know. You don't know my question
Yeah.
yet, but no.
You don't know
So
me.
my question,
Go.
Go.
so my question is, I've been, I have some funds I've been investing, and this is not my husband and I's major retirement funds or anything else. It's just I saved some money in the event, that emergency money for the house. And that's enough money to cover what I need it for. So I started investing it just to try to build some. And my specific question is when investing this money, I've been getting very tempted lately to, have a stock that maybe it goes up and then or an ETF fund that goes up and I want to sell it and buy into some other funds that I've noticed have gone down and so on. So I've been moving things around, which I know are taxable events. But and I'm just pulling
Down,
myself
I
up in the
used
air.
to think you were a nice person.
Igor, down, Igor.
Nina!
Change.
Are you market timing, Nina? You think maybe a little?
I probably am. Yeah.
Okay, but let's go back. Let's go back.
And when Tom does that long breath, when he does this thing, you go, "Oh, no, I'm in
not
trouble now." I hate it when he
scaring
makes
you.
that sound.
But let's go back.
Well,
I mean,
that's
so
why I
if
called,
truly
because
the
my
money
husband
is for
keeps telling me-
emergencies, yeah. Go ahead.
Yeah.
What'd your husband tell you?
My husband told me, he's like, I shouldn't do that. And so I'm calling you to talk me off the cliff to stop doing that. And I should say that the money is for emergencies, but I always keep like 80% of it that I don't touch. So it's like 20% I'm playing with.
20% you're playing with. Okay, but let me ask you this question before Tom does his sigh again.
Not going to do any more size.
The 20%, is this money that you would be totally comfortable taking to Vegas and losing on a throw of the dice?
Comfortable? No. But could I do it and be okay? Yes.
Well, I mean, because that's what
Okay,
you're doing.
financial.
I mean, in other words, yeah, I mean, why not just go buy Novavax or Zoom or, one of the hot companies, right? You're doing
That's
that at
what
another
she's
scale.
saying
Here's
she,
the way
she wants to do.
if you want to do that, here's what I would do. I would set aside the 80% in something that's
Which I think she does.
pretty liquid, Pretty safe, not going to move around much. You've heard the funds that we recommend, some sort of short-term bond fund. And then I take the other 20% and go ahead, make your bets, figure it out. What's going to be great, what's going to be lousy, and then do your trading in there if that's something that is of interest to you.
And bear in mind that if you succeed, you're just lucky, and if you fail, you're just unlucky.
It's Don's fault.
Doesn't make you talented or untalented. It's winning in the stock market is no different than winning on Vegas. It is a matter of pure luck. It's random. It's not based on how smart you are.
Yeah, no, it's definitely, it's entertainment value, I have to say. And,
that's different.
When my husband asked me about this, I'm like, well, sometimes, I bought some stock in Tesla because, and I looked at it, I'm like, this is crazy, and it's a risk, and it does nothing for me other than, I own some Tesla. But then I thought, well, I'm not going to buy this pair of shoes or this new outfit because I'm not going anywhere. So instead, I took that money, and I'm like, now my little perk to myself is I bought some Tesla.
Okay. No, that's fine. You see, you're looking at it the right way. If you're looking at it that way, then who can argue? It's your money. You get to play with it as you want. I don't see why not. But just remember,
you're part of the 13 million people at Robinhood are doing the same thing. I mean, that's what
just
people
remember,
are doing.
if you fail, your husband will taunt you mercilessly. Just want you to know.
Oh, yeah. No, he's like,
correctly
his
so.
rules were do not time the market, do not buy individual stocks, and he had one other rule. And he gets like, don't invest anything you can't afford to lose. Those are his rules.
Wow.
Pretty good advice. You married to Warren Buffett, or what?
Does he do radio? Because we need a replacement for when one of us is gone.
His degree's in economics, and he's like, he's like market. He goes, you're gambling. He goes, just accept you're a gambler.
You're a gambler. You're an addict, Nina. You need help, Nina. I went
to Vegas once, and I allowed myself $50 to play on the tables, and I lost it in the first 5 minutes.
And that was that.
But I was lesson learned, and then
this is actually a smidge safer than that, a smidge, but it's still risky. But hey, again, if you seem to understand, and your husband really understands what the risks are, so play. It's fine. We just don't want to suggest that to people as a normal way to, quote, invest, because, as your husband said, it's not investing, it's gambling. Thank you for the call, Nita. We really appreciate it. 855-935-TALK is our number. Thank you all for calling and listening.
Tom and Don are talking real money.
If you don't have a financial plan, well, sometimes you just need a little help getting started. And we offer that free help to anybody in a meeting with one of our fiduciary advisors. To set one up, just go to vestory.com, vestory.com, or call 800-386-3004. There's no obligation, no cost, and I promise, no sales pitch.
Your guides to a really great financial future. Tom and Don are talking real money.
And because of this terrible virus, the situation right now for many is bleak. Lots of folks are getting laid off, either voluntarily or involuntarily. And if you need help getting a little plan together, what to do with your money once you are laid off, if you fear you might be, or you're taking a voluntary separation, work with one of our advisors. It's free and easy. You can meet with us for nothing. You don't have to become a client. We just want to help people. We want to educate people, and it's really easy to do. Go to Talking Real. No, don't go to Talking Real Money. You could go there too, but it's easier just to go to vestory.com, vestory.com, and set up an appointment or call 800-386-3004.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?